Okay, we're going to do a review of uranium here on the Swing Trading with Cycles channel. Welcome. This is October 29th, Saturday night. So we have the last weekly candle to sort of close out October, if you will. We'll have one more day of October and Monday, obviously. But then, next week's candle will be mostly November. And that's an important clue that we're going to start to look at. And we'll look at that in this video as well. So we'll start with the daily chart for CCJ. We'll use CCJ as our proxy. And just to kind of orient yourself, this yellow line is your 200-day moving average. The sort of blue line is your 10-day moving average. So the 10-day moving average is obviously crossed below the 200-day. You can see did that quite a while, maybe 4 or 5, 6 days ago, right? That's not a good sign. That's usually not a good sign. Now, that's a little bit irrelevant though. Like again, I tend like the moving average thing is a very sort of slow lagging indicator. Not something I recommend people kind of use as a trading signal per se. But more importantly, if you think about the context of this gap down on day 5, so this is a day 15 low, and then we've had this little trend up move, right? Like this is a little uptrend on the daily chart, right? We made this higher high, we made this higher low. We made this higher high, we made this little higher low, right? This higher high. Now, this is a question of, are we breaking the uptrend, right? Now, first off, most importantly, this is a big bearish outside candle. That's usually a really bad sign, right? That's usually a harbinger of bad things to come, right? Especially, and the thing is that they don't always come as individual bearish outside candles. Sometimes they're compound, so it's hard to see unless you have that experience and you're looking at it that way. But we made a higher high and then we made a higher lower low. So another way to think about that is this is a false breakout, right? A bearish outside candle is a false breakout. A bullish outside candle is a false breakdown, right? And so we then moved aggressively lower. And as you think about the way candles form, this candle here, which ended as a green hammer-ish kind of candle, was actually a very red candle at one point, right? Because we were all the way down, because we have this little wick down here, that means this was a very red candle, but we didn't get followed through. We actually got a move higher on the lower time frame. And so this candle sets us up for a potential little move up on Monday, right? And that being your level, your $26 level, call it, right? That we need to get kind of above. Otherwise, this becomes your kind of lower high. And then you can kind of argue, okay, well, this maybe wasn't a low. But look at this move above the 10-week moving average. I think no matter how you kind of slice it, you could call this a little small cycle, right? Day 7 high, day 15 low. Now we have a day 9 high. Do we get another higher high above that? Or do we start a decline lower? It seems like we probably, this is a pretty tough hurdle to climb. Yet at the same time, if we do climb it, it means we're going to do it really aggressively. So an options play would kind of maximize that sort of risk reward. And as you think about the weekly cycle where we are, we made that higher high above here, and then we actually closed above it, right? Like we, because of that little move up from that hammer candle, that is potentially week 17. That means, again, thinking about price action, the important way to think about this, right? To kind of understand, anticipate, all things being equal, we probably open as an inside candle next week, right? Week 18, right around here, right? Because that's where we closed, right? And we have all this wick here. So we probably open right here. We need to get outside of the range of this candle, right? And let's shrink our world down there, right? So call it the 26 level. Kind of so it's that same level that we kind of identified multiple time for analysis. That's the point. And then to the downside, you want to be careful below 23, call it, roughly. And on the monthly level, again, knowing November candle opens on Tuesday, it's going to be an inside candle. I mean, look at this wick that we left behind, but it's on the lower end. So November becomes an inside candle, but it it ends up having the risk of being kind of like a little bit of a bear flag, because of the location, it could, it's going to open at the lower end of the range of the candle, most likely, right? So that's going to be important that we watch. And of course, you see we have it labeled as 31, day 31, because we are in the 3-year cycle decline, is the assumption, right? That we had a top on month 25. This has been a pretty gentle 3-year cycle decline, though, right? We haven't had like the big capitulation move, which you might expect would kind of intersect with this, little 50-month moving average. Doesn't mean we have to get down there by any means, but it is like a nice little sort of just pressure test, right? And you can imagine at least you would think that takes us down to like around the 18 level. Because I remember trading this to the long side up there, like when 18 was like a real barrier we needed to get through, and then like that $20 area was a real barrier. So you imagine those downside levels come into play, but at the same time we already kind of tested those not so long ago, so we're gonna have to see. But that's going to be the important level that we're going to watch. That low from this month was $21. So that, like, because as November opens as an inside month, we're going to want to watch basically the range of all of October. And so let's look at a smattering of some other uranium names. Just really quickly. Okay. So that was CCJ. Let's look at the ETFs. So yeah, very similar pattern for URA. Yeah, pretty much the same kind of move. URNM, same pattern. Yeah, they're all doing the same thing. UUU doing the same thing. DNN. Yeah, it's all like the same thing to a different degree. DNN does not look as bullish. This is more of like a dragonfly, which is always a little bit of a, like, yeah, not the most bullish pattern necessarily. Ooh, Canalaska did not look good. So that's underperforming. And that's Paladin. Yeah, Paladin is looking okay. Doing basically the same pattern. Lightbridge. Oh, Lightbridge is making higher highs. Looks like it's trying to make a run to that 200-week moving average. Or 200-day moving average. That's interesting. And, ooh, bullish outside week for Lightbridge. LTBR. That's good to know about. Look at that. Nice. What else? Peninsula. Still consolidating, basically. Govix. Okay, Govix did a bullish outside weekly candle as well. Let's see how we're looking on the daily. That was a pullback, right? Yeah. Yikes. So a bullish outside weekly candle, but a bearish outside daily candle. That's complex stuff, man. Yikes. So near term, not looking great, because we're going to open as an inside day on Monday, best case scenario, and probably try to test that low. That's interesting. Wow, that's like real inside baseball. So that's a little bit of a run through of uranium, the uranium names. Again, it's going to be dominated by the broader market trend ultimately, and so definitely take a look at that broader market update. Take a look at the link in the description. That's going to really kind of dictate a lot of what's happening ultimately.